Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Coherent Corp. Quarterly Report. Coherent Corp. offers a diverse range of products and services across various industries. The company's networking segment provides essential components for data center and communications applications, including transceivers, systems, modules, and semiconductor devices. In addition to networking solutions, Coherent Corp's materials segment offers engineered materials, laser optics, thermoelectric components, and advanced ceramic and metal matrix composite materials and products. These materials are used in various industries, including electronics and instrumentation. The company's laser segment is a significant contributor to its business, offering excimer lasers, solid-state lasers, C-Otwo lasers, and laser systems for industrial applications such as semiconductor capital equipment, display manufacturing, precision manufacturing, and scientific research. Coherent Corp's products and services are marketed through direct sales, representatives, and distributors. Overall, the company's product portfolio is extensive, catering to various industries including communications, electronics, instrumentation, and more. The stock price of Coherent Corp has skyrocketed by over 95% in the past year due to robust demand in the data center and communications sector. A key driver of this growth is the increasing investment in artificial intelligence, AI infrastructure, which Coherent is well positioned to capitalize on with its diverse product portfolio. The company's strong performance has been further boosted by exceeding earnings expectations and providing a positive outlook for future quarters. Coherent's data center business has seen significant growth, with revenues rising 61% year-over-year in fiscal year 2025 and continuing to increase in the first quarter of fiscal 2026. This surge in demand is expected to continue, with management projecting continued growth through the second half of fiscal 2026 and into fiscal 2027. The company's strong balance sheet and operational efficiency have also contributed to its success, providing financial flexibility for investments and expanding production capacity. The combination of these factors has led to a significant increase in Coherent Corp's stock price, making it an attractive investment opportunity for those looking to capitalize on the growing demand for AI infrastructure and data center solutions. Coherent Corp market capitalization of $31 billion is significantly larger than the average industry peer of roughly $6 billion. This shows that Coherent Corp holds a significant advantage in their industry. Coherent Corp trades at a higher price-to-earnings ratio of 197 times and a higher price-to-book ratio of 5.49 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 43% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a review of the key trends in the industry. Revenue growth is primarily driven by strong demand in data center and communications markets, fueled by increasing investments in AI data center infrastructures. This has led to significant increases in revenue for this segment, with a 33.5% increase in 3 months and a 30.6% increase in 6 months. Another key driver of revenue growth is the sale of aerospace and defense business, which generated a $400 million gain in the first quarter of fiscal 2026. Additionally, elevated demand for new ZR/ZR+ transceivers and sustained growth in traditional telecom transport products have also contributed to revenue growth. On the other hand, revenue decline can be attributed to the divestiture of aerospace and defense business, which resulted in a decrease in industrial segment revenue. However, this decline was partially offset by increased volumes in the semiconductor capital equipment market. The industrial segment revenue decreased 9.7% in 3 months and 4.8% in 6 months. In terms of specific areas driving growth, lasers, systems, optics, components, and materials for semiconductor and display are key contributors to revenue growth. Additionally, capital equipment, precision manufacturing, life sciences, consumer electronics, scientific research, and automotive have also seen increased demand, contributing to overall revenue growth. The financial performance of a company has undergone significant changes between 2024 and 2025. Net income has increased by substantial margins, with a 42% rise in the 3 months ended December 31, 2025, and an impressive 189% increase in the 6 months ended December 31, 2025. This growth is reflected in the net income figures, which rose from $101,542 in 2024 to $143,814 in 2025. Profit margins have also seen a notable improvement, with profit margins increasing from 4.94% in 2024 to 8.59% in 2025. This increase is evident across various metrics, including net income margin, gross profit margin, and operating profit margin. The net income margin improved from 2.3% in 2024 to 10.4% in 2025, while the gross profit margin increased from 35.1% in 2024 to 36.8% in 2025. The reasons behind these changes are not explicitly stated, but can be inferred from the data. The increase in net income and profit margins may be attributed to various factors, including improved sales or revenue growth. However, a decrease in operating efficiency is also implied due to higher accounts payable and lower net earnings. This suggests that while the company's financial performance has improved, there are still areas for improvement in terms of operational efficiency. The company is indeed generating positive operating cash flow. This can be seen in the net cash provided by operating activities, which stands at a significant $103,855. Furthermore, the operating cash flows from finance leases and operating leases are also positive, indicating that the company's financial performance is robust. In addition to these indicators, the company's 6-month results for both 2025 and 2024 show positive operating cash flow. For the 6 months ended December 31, 2025, the figure stands at $104 million, while for the same period in 2024, it was $340 million. These numbers demonstrate a consistent trend of generating positive operating cash flow, which is a key indicator of a company's financial health and stability. The company's debt level has undergone significant changes over the past year. Initially, the current portion of long-term debt decreased from $188,306 to $106,463, while long-term debt decreased from $3,498,615 to $3,245,403. However, this trend was reversed when senior notes increased by $14.6 million and Term A facility increased by $604.6 million, offsetting the decrease in Term B facility of $1,027.5 million. Nevertheless, total debt obligations decreased from $3,687 million to $3,352 million. In terms of interest expenses, there has been a notable decline. Interest expense decreased by $18,341 and $26,264, minus 20%, in 2025 compared to 2024. Additionally, cash paid for interest decreased by $39,462 in 2025 compared to 2024. Furthermore, interest expense on term loans was lower by $18 million for the 3 months and $26 million for the 6 months. Overall, these changes indicate a reduction in both debt level and interest expenses, suggesting that the company has made efforts to manage its financial obligations effectively. Management is optimistic about the company's outlook, citing sustained growth in data center and communications markets. This growth is expected to be driven by investments in AI data center infrastructures. To align with this strategy, the organizational structure has been realigned into 2 reportable segments: data center and communications, and industrial. The company is also implementing restructuring plans to transform its business model and realign its cost structure. This effort aims to improve efficiency and increase financial flexibility by the end of fiscal 2026. Management anticipates strong demand for AI data center solutions in the data center business and increased revenue in the communications business due to higher demand for data center interconnect and traditional telecom applications. In addition, the company plans to use funds primarily to fund future capital expansion in its silicon carbide business. This investment is expected to increase available free cash flow and provide greater financial and operational flexibility. Overall, management's strategy focuses on leveraging investments in AI data center infrastructures to drive growth and improve efficiency across the organization. The company's financial reports provide clear evidence of its dividend payment history. On page 8, it is stated that the company has paid out $11,438 in cash dividends for the year 2025. This indicates a significant investment in its shareholders through dividend payments. Furthermore, on page 37, it is explicitly mentioned that the company has indeed paid dividends with an amount of $11 million. This confirms the company's commitment to rewarding its shareholders through regular dividend payments. Concerns about inventory buildup and supply chain disruption. There are growing concerns about the potential for supply chain disruptions and inventory buildup in various industries. One of the key issues is the increase in raw materials inventory, which can lead to a range of problems including wasted resources, increased costs, and reduced flexibility. Another significant concern is the impact of tariffs and export restrictions on rare earth minerals used in products. These minerals are essential for many high-tech applications, and disruptions to their supply chain could have far-reaching consequences for industries such as electronics and renewable energy. These issues highlight the need for companies and governments to take proactive steps to mitigate the risks associated with supply chain disruption and inventory buildup. This may involve diversifying suppliers, investing in logistics and transportation infrastructure, and implementing more agile and responsive supply chain management practices. That concludes the financial summary for Coherent Corp. Feel free to comment below, and I will be happy to answer them when possible.